Hello everyone and welcome to Smart World with CNBC. Bonjour à tous et bienvenue dans Smart World avec CNBC. At the top of this program, le Boeing 737 MAX sera-t-il de retour sur le marché en 2021? On décrypte les résultats du Amazon Prime Day et notre grand format du jour. CNBC vous explique comment les élections américaines impactent les marchés. C'est parti, let's go! Boeing 737 MAX deliveries expected to start in early 2021. Le modèle pourrait être autorisé à voler avant la fin de l'année. Sheila Kayaoglu, Jefferies Aerospace and Defense Analyst, joined CNBC to discuss the significance of satisfying a top EU regulator.
So the reason why it's such a big deal is Boeing is holding about 450 aircraft in inventory, or about $16 billion on its balance sheet. So once the aircraft is approved, it could get off the ground.
And what timeline do you expect that to take place by?
So what we've heard from some of the airlines, Ryanair, for example, is saying that they are expecting their first aircraft in early 2021. They have about 135 MAXs on order. American Airlines stated that they'll start training in the December timeframe, and that it'll take 2 months for their 1,700 pilots to get through the remote training module. So we're expecting deliveries to start in early 2021, but at a very low level, and production even lower, because there will be a delta between production and deliveries of the aircraft. And we expect that 450 aircraft to be depleted by the end of 2023. So it'll take some time, but no doubt a positive development for Boeing and the MAX.
Well, during all of this time, as they have gotten the regulatory nod of approval here, the demand for flying, as you know, has dropped off a cliff, and it's a totally different picture than when this airline first went online. How, if at all, Sheila, does that impact the trajectory of sales and deliveries of the 737 MAX when they're able to do so?
So what we've taken into account due to demand and air traffic falling off is that the 4,000 or so orders they have on the order book for the MAX goes away by about a third, which still at our production rates gives them about 6 to 7 years of backlog. So they don't need any more new orders. It's about how the airlines could start taking the aircraft in to their fleet and how that filters through. So the reason I mentioned Europe is a positive development, it's slated to take 25% of deliveries over the next few years. China's another 20%. So that's why we're watching these regions as we see their regional approvals, because at least it offsets some of the demand and air traffic falling off. I will say that domestic air traffic is coming back much faster than international traffic, which is pretty depressed at the moment.
Un haut régulateur européen de la sécurité aérienne annonce que le 737 MAX peut désormais voler en toute sécurité. Une déclaration faite après les vols d'essai de septembre. Je vous le rappelle, Boeing était au cœur d'une polémique après 2 accidents mortels en octobre 2018 et mars 2019. Le modèle avait été immobilisé à la suite du 2e accident. Les acheteurs abonnés d'Amazon Prime étaient au rendez-vous aussi cette année. Les Prime Day ont ainsi permis aux vendeurs partenaires de dépasser un chiffre d'affaires de 3,5 milliards de dollars pendant l'événement. Andrew Lipsman, principal analyst at eMarketer, explains why this year was unlike any other for Amazon Prime Day. Let's see how it may have kicked off an early holiday shopping season.
It's interesting that Amazon is revealing more information about sales and growth. This is, of course, a subset, and they're really promoting how small and medium-sized businesses are doing. The more interesting number in some ways is the 60% growth rate behind those small and medium-sized businesses. That suggests overall that this was going to be a pretty strong growth rate. Now, we were expecting about 43% growth overall to just under $10 billion in sales. And from what they've revealed, it seems very much in line with what's possible. The biggest differences this year begin with the time. So it's in mid-October this year when it's previously been in mid-July. Usually it's for summer purchases during a sleepy time of year for e-commerce and retail. That kind of is an early lead into back to school season. This year, it becomes the early lead into the holiday season. One thing that was interesting about the Prime Day promotion is that over the last few years, big box retailers have really counter-programmed against it. But in the past, they were able to prepare for that mid-July time period. This year, they were kind of in the dark and had to kind of scramble to align their promotions because Amazon announced Prime Day so late. But they do have a big advantage coming into the holiday season, which is that they are all really mavens at click and collect. And especially with so many holiday buyers increasingly uncertain about getting gifts in time for the holiday, you're probably going to see a big shift in activity, especially after about December 14th, towards click and collect activity. And Amazon just can't match the big box retailers on that dimension. This will be my 15th year forecasting holiday e-commerce, and typically there's kind of a limited set of variables that determine how healthy the season is going to be. The most unpredictable season I ever saw was in 2008, in the heat of the financial crisis. Consumer demand dropped off really fast in September and October, which made the season hard to predict. This year you have both the demand vector, because we're in a recessionary environment, but you also have varying demand across categories. So some categories like consumer electronics, for example, because of the pandemic, there have been all these new need states.
Les vendeurs tiers sont de plus en plus nombreux et de plus en plus importants pour Amazon. Ils représentent au total environ 58% du total des marchandises vendues par Amazon. Selon les calculs d'Andrew Lipsman que vous venez d'entendre, Amazon aurait généré au moins 7 milliards de dollars de ventes au cours du Prime Day de cette année. Europe is again in the grip of a COVID-19 resurgence. Le Royaume-Uni, l'Espagne et la France signalent des milliers de nouveaux cas par jour. Un nouveau coup dur pour l'économie européenne. Jim O'Neill, former chairman of Goldman Sachs Asset Management, joins CNBC to discuss how the economy is likely to be affected by the new wave of coronavirus cases.
Well, I think it's spreading across the whole of Europe, so it does look as though the strong momentum, in fact, very V-like momentum that was occurring through the third quarter is certainly going to be at a minimum easing, and unless they can think of something to get these infections under control, it might become worse. So it is, after all the optimism a few weeks ago, it's starting to look a bit more concerning in Europe, that's for sure.
Selon Jim O'Neill, la situation économique européenne pourrait s'aggraver avec la deuxième vague de coronavirus et le durcissement des mesures sanitaires. Selon lui, le rebond de l'économie européenne pourrait être moins fort qu'espéré. Comment l'Afrique a-t-elle géré la pandémie? Le virologue camerounais et président du Center for Disease Control en Afrique, le docteur John Nkengasong, s'exprime sur CNBC. According to him, Africa has done a remarkable job in the fight against COVID-19, but more could be done in certain parts of Africa. Let's listen.
Dr. Nkengasong is the director of the Africa Centers for Disease Control and Prevention. He has led Africa's efforts in responding to the COVID-19 pandemic.
My caution to the continent is that we cannot relax the measures that we've put in place. We have to intensify our testing. We need to intensify our ability to do contact tracing. We need to wear masks universally. We need to improve hygienic conditions that we have all the time, because that is what has helped us to bend the curve.
And Doctor, how do you think the continent's leaders have handled the crisis so far?
The lesson number one Africa has to learn is that we need to deliberately consider our health, strengthening our health system as an investment for our own security, health security, investment for our own economies. Look at the devastation that this virus has caused on our economies, and the devastation that in the generations to come, we continue to live pains of this. So I think really deliberately investing in that is important. And that segues to the second part, which is the governance and leadership. I think we would not be where we are if the continent had not taken their leadership role seriously. So the overall coordination has been remarkable. I think something that I've not seen in my more than 30 years of public health practice on the continent.
Le continent continue de voir des statistiques contrastées dans différentes régions. Certains pays signalent une baisse des chiffres, tandis que d'autres constatent une résurgence de leur nombre de cas. Selon les données du CDC Afrique, le continent a enregistré 39 584 décès. Le Maroc, l'Afrique du Sud et l'Égypte sont les pays les plus touchés. Ils représentent à eux trois 60% des cas du continent. EUA vaccine application could be ready by late November. This is what Pfizer announced. Pfizer compterait déposer une demande d'autorisation de leur vaccin aux États-Unis, un vaccin que le laboratoire développe avec le partenaire allemand BioNTech. Explication de Meg Tyrrell de CNBC.
Hey, David. Well, in an open letter, Pfizer CEO Albert Bourla is saying today that they still could know by the end of October whether their vaccine works to protect people against COVID-19. But they are going to have to wait for the safety data that the FDA is looking for before they would file for emergency use authorization. And that data they expect they could have by the end of November. So if all looks good at that point, they say they will quickly file for an emergency use authorization. Now, that is based on the getting 2 months of safety follow-up data after half the people who are enrolled in the trial have received their second shot. So here you can see the enrollment in these trials. Both Pfizer and Moderna passed that halfway mark in late September. And so that's why we're seeing these timelines of late November for potentially filing for emergency use authorization for both of these companies. We've heard the same thing from Moderna's CEO. Now, guys, of course, there's also news out on Gilead's remdesivir from a WHO trial of multiple repurposed medicines looking to see if they help with hospitalized patients. And these data from the WHO essentially say that remdesivir and other medicines that they looked at had no benefit in terms of saving people's lives in the hospitals or even reducing their hospital stay, guys.
Il est donc peu probable qu'un vaccin soit disponible avant les élections américaines comme l'a promis le président Donald Trump. Pas de réel impact car les Américains restent en majorité méfiants des traitements Covid-19. Une récente étude coordonnée par l'Organisation mondiale de la santé a indiqué que le remdesivir ainsi que 3 autres traitements médicamenteux utilisés aux États-Unis ont peu ou pas d'effet sur les taux de mortalité des patients hospitalisés. The combination of no stimulus, fading economy momentum, and the threat of rising coronavirus cases seem to create a rather negative dynamic for risk assets, according to CNBC. Les démocrates et les républicains sont dans l'impasse. Le montant du stimulus est toujours le principal point de désaccord. Cependant, les négociateurs des deux parties espèrent toujours trouver un compromis avant le 3 novembre.
There was a scooch, which is a technical term of progress, yesterday when we saw that the Republicans, at least the Secretary Mnuchin and the President, would accept some of the language around testing from Nancy Pelosi. But that's about it.
I want a stimulus. The Republicans will approve a stimulus. The problem is she doesn't want to do it because she thinks it's bad for her election. The fact is she's wrong because people know she's in our way. She's not approving it. She doesn't appreciate our people, and she doesn't appreciate at all our workers. Nancy Pelosi, we are ready to sign and pass stimulus.
Mitch McConnell has said he doesn't want to go above $500 billion in this deal. Nancy Pelosi is way above that. So there's a lot of room between those two sides. Pelosi sending this letter to her fellow Democrats yesterday, saying she's encouraged by what Trump has been saying. She says, hopefully the president's statement to his team to go big or go home, and that he'll accept a larger relief package, will translate into results. So Pelosi sort of triangulating now Trump against McConnell. McConnell saying he's holding fast at $500 billion. No indication on how we're going to get this negotiation resolved. It is a triangular shaped steering wheel, and that makes it very hard to drive a car.
Les deux parties qualifient les discussions de productives, mais insistent sur le fait que des différences majeures subsistent. Leurs désaccords concernent principalement l'assurance chômage, les crédits d'impôt, le financement des services de garde d'enfants et l'assurance de responsabilité civile. The outcome of the 2020 election between Joe Biden and Donald Trump will likely have a major impact on the equity market. Quel est l'impact des élections américaines sur le marché boursier et comment les investisseurs devraient-ils se préparer? Here's how presidential election results will impact the market.
September 2020 was a particularly dismal month for investors. All three major U.S. indexes posted their first monthly loss since the beginning of the pandemic in March. And the SIBO Volatility Index, often used to gauge the market's fear, spiked above 30 for the first time since mid-July.
I think this near-term period where we have not only COVID winter, but significant policy uncertainty about the United States, when you can't be certain who will be the president of the United States, what party will be in control, then you're going to have some elevated volatility.
The market typically slows a little leading up to an election and reacts more positively in the short term when a Republican president is elected.
The stock market and the political environment clearly are closely interrelated, and the stock market reacts generally to political news, and the stock market watches the outcome of an election and the presidential election in particular very closely.
Trump tax reform, tax code changes. I mean, I criticize aspects of it on fairness grounds, but the stock market looks at earnings, and that tax plan was a huge gift to corporate earnings.
Remember though, only 52% of American families are invested in the market. Long-term policy has a bigger impact on the economy than market performance. The economy has historically performed better under a Democratic president. The GDP grew 1.6 times faster on average, and private sector job growth was nearly 2.5 times faster on average under the Democrats. But the election can be an important element for those looking to earn big in the market. So how does the US election impact the stock market? And how can investors prepare? Historically, the stock market slows down and shows a weaker performance in the period leading up to the election. On average, the equity market showed less than a 6% gain during the election years, compared to an 8.5% gain in any other given year.
The stock market hates uncertainty, and of course, election is the ultimate in uncertainty. I think particularly after 2016, when people expected one result and we got a different result, or after 2000, when you had an extraordinarily tight race and you saw the market go down after that. These are reminders that this is a piece of uncertainty which you really can't minimize.
And that uncertainty and the fear of what is to come would generally depress the valuations, which would translate into potentially lower returns in the year before an election is to take place.
However, despite a more modest return, stock performances during an election year have done well. Across the last 7 presidential election cycles, average gains for major indexes like the S&P 500 and Dow Jones showed positive returns in the 6 months before Election Day. The only exception being the 2008 financial crisis that rocked the stock market right ahead of November. Despite the concerns over market volatility following the market performance in September, experts reassure that volatility is just something to be expected at this time of year.
Typically, market volatility, or at least volatility implied by the options market, will be elevated ahead of an election and generally resolved following an election if an election result is indeed conclusive. In current situation, we might worry that the resolution of ultimate uncertainty is going to take some time if the election is close or contested.
The bright side of that for investors is that most of that volatility can usually set up some pretty good buying opportunities, because what will happen? The markets will adapt. The market will just get used to whatever the new circumstances are, and it will continue to go higher. Barack Obama, a great example for that. They're certainly not the kind of person you'd perceive as being a friend to Wall Street, but the market did great during Obama's 2 terms in office. So it's just a matter of adapting, adjusting, getting past that initial bout of volatility and figuring out what you're dealing with.
Certain firms like LPL Financial have also tried using past market data and performance to predict who would win an election.
When you get within 3 months of the election, which is about next week or so, how stocks do has a really good track record for who might win. Now, here's what I mean by that. If the S&P 500 is higher, the incumbent party tends to win. And if the S&P 500 is lower, the incumbent party tends to lose. Think of it like this. Stocks have been right every single year since 1984, and they've been right 20 out of 23 times all the way back to the late 1920s. That comes out to an 87% winning percentage.
If the stocks are right again this year, the winner would be the incumbent president, Donald Trump, after a slow market recovery since the beginning of August. However, some market experts remain skeptical of drawing foregone conclusion based solely on market data.
Every election is different. Every election is different because the candidates are different. Every election is different because the environment is different. So I think you have to really just think about where we are, what the policy differences would be, what the personality differences would be, what the configuration of Washington overall would be after the election. You've got to factor all that in making investment decisions, but you shouldn't just resort to sort of a back of the envelope, this is what happens with elections, because I just think that that kind of calculation is pretty crude and not very useful.
So what happens once the vote has been cast and tallied? According to a study from the US Bank, stock market returns tend to be slightly lower after the year following the election. JP Morgan also discovered that in the short term, markets tend to react more positively right after the election of a Republican president, possibly due to the preconception that Republican policies are more market-friendly.
Especially when an election was close, a surprise or kind of near surprise outcome where a Republican president is elected corresponded to a positive market reaction, and a surprise or kind of close election result in favor of a Democratic candidate produced a negative market reaction.
However, in the long term, it's a different story.
If we look at the entire presidencies, the stock market performs on average much better during Democratic presidencies than the Republican ones. So the bulk of returns, positive returns in the market actually are earned during Democratic presidency. This could be a bit of an artifact of the timing. This could be an artifact of the timing because if we look at the past presidential elections, Democrats are more often the winners in a recession, whereas Republicans are more often to gain power during an expansion or close to a peak of an expansion.
Changing the resident in the White House also impacts the market. Analysts found that stock market gains averaged at around 5% when a new party came into power, compared to 6.5% when the incumbent president is re-elected for a second term.
During the first term of a new president, there is still some uncertainty about what that president's policy is going to be. And so market valuations might reflect that uncertainty. Whereas a second term of any president is typically going to continue the policies of the previous presidency, of the first term of that same president, and therefore there's less uncertainty for the markets to process, and therefore that might contribute to higher valuations during that second term.
In case of general elections, congressional results could impact market performance. Similar to presidential elections, which party controls Congress is not a factor to equity performance. However, history has shown that the market performs better under a divided Congress, is there is less chance of drastic policy changes.
So the market will do well with a Democratic president, a Republican Congress, or a Republican president, a Democratic Congress. A great example of that was during Bill Clinton's time in office. Most of the time that he was there, he was dealing with a Republican Congress. Same thing for Barack Obama, had to deal with a Republican Congress for a good portion of the time that he was in office. And the market tends to like that gridlock atmosphere because they figure, we don't really trust you guys anyway. And by having a split party thing, well, it kind of helps to make sure you guys don't break anything while you're there.
Whatever the result might be, a majority of investors do agree that the presidential election will have an impact on the equity market. According to a recent survey from Hartford Funds, 84% of investors said the 2020 election results will impact their investing habits.
I only see more uncertainty ahead just because the election is probably going to be close and the result is not going to be settled for quite some time. And so I would say the risks are definitely on the horizon for investors.
However, almost every expert unanimously agrees that placing stock bets based on politics isn't a great idea.
First of all, people are biased. People always think that their favorite candidate is going to be best for the stock market. Second of all, people think that they're able to predict how the election is going to turn out. And as we've learned in many elections, we really don't know. And finally, people think they know how the market's going to react when you get that election result. I know a lot of Republicans thought the market was going to go down when President Obama was elected. I know a lot of Democrats thought the market was going to go down when President Trump was elected, but in fact, the market went up both times. So if you're biased, you don't know what the outcome is, and you don't know how the market's going to react based on that outcome, you really shouldn't make an election bet.
The 2020 election is also likely to be very different from any of the past elections, given the state of the economy suffering from a national pandemic.
I think investors usually think about the economy as being the most important thing when it comes to investing, but the truth is that the fate of this economy depends upon the virus itself. Until we control the pandemic, we will not have a healthy economy. So I think as people think about investing, think about voting, the most important thing is how do you deal with the pandemic? Because if you can deal with the pandemic, get past the pandemic, then the economy will recover, and that should be good for portfolios.
The outcome of an election can have an entirely different effect on different sectors, making predictions for future market performances that much more difficult. The gridlock in Washington and the results could also have a different impact on the market in 2020, as many sectors are counting on more stimulus during the pandemic.
Healthcare is going to be huge in this election to just how the results will determine the future of that sector. It's anybody's ball game right now, but after the election is over, you'll see investors really start to put their chips on the table in terms of where they think the future is going to go.
Success will ultimately depend on how much risk an investor is willing to take.
And of course, the more risk-tolerant person will invest more in stocks and reap the benefits. And the more risk-averse people will perhaps stay more on the sidelines and potentially miss the gains as a result.
I think as an investor during a time like this, you want to make sure you've got your bases covered. So it really is some of the old-time diversity, those kind of things.
Remember, any timing decision when it comes to investments really means you can make two good calls. You know when to get out and you know when to get back in. And I've never met anybody who can consistently make one good call on that. So I would think that the right thing to do is think about where you want to go in the long run. What are you trying to do with the portfolio? Think about valuations and place your bets accordingly. And try not to try and time investments around an election.
Les analystes ont également constaté que les gains boursiers étaient en moyenne d'environ 5% lorsqu'un nouveau parti est arrivé au pouvoir, contre 6,5% lorsque le président sortant est réélu. L'histoire montre que le marché fonctionne mieux sous un congrès divisé, un signe qu'il y aura moins de chances de changements politiques drastiques. Thank you all for being with us. Merci à tous d'avoir participé à ce format 100% hybride. See you very soon for the rest of international news.